Don't forget, it's currently a $3 trillion asset. I think it goes to 100 trillion. The only way it gets there is to have more larger and larger pools of capital coming into the space. But if you think of it in those terms, it's still only 3% of the journey to where it's going to in the next 10 years.
Jesus.
Yeah, so it's
your thesis of 100 trillion for the asset class?
Therefore, it goes up 30x from here. I mean, again, people don't realize that. Am I too late? Bitcoin's at $100,000. Am I too... I'm like, it's 3%. And it's therefore it should go up 33x from here. Okay, find me anything else. Assume that I'm wrong by 50%. It goes up 15x from here. Find me another investment anywhere in the world that will unfuck your future like this. It doesn't exist. Certainly not one you've got access to.
The financial world is on the cusp of a transformation that could redefine how wealth is built and preserved. Imagine an asset class currently valued at $3 trillion, with the potential to skyrocket to $100 trillion within a decade. Such a meteoric rise would require unprecedented levels of capital, drawing in institutions and investors from around the globe. Yet, despite its remarkable growth potential, this asset class is still in its infancy, just 3% of the way toward its envisioned future. The opportunity it presents is not just immense, but transformative, paving the way for a new era in finance. Renowned macro investor Raoul puts this vision into perspective with his bold and captivating analysis. People ask, "Am I too late?" when Bitcoin hits $100,000, he says, emphasizing that even at such levels, it represents only a fraction of the journey. Powell projects a staggering 30 times growth from current valuations, or, even in the most conservative scenario, a 15 times increase. His message is clear. The digital asset space offers an unparalleled opportunity for wealth creation, unmatched by anything else accessible today. For those willing to embrace the shift, the rewards could be transformative, far outpacing traditional investment vehicles. Let's watch clips from Raoul Pal's explosive interview to gain more insight. Don't forget to like, subscribe, and enable notifications for additional in-depth content. Thanks for joining us again. Enjoy the video.
Explain to me what's going on with the financial system in 30 seconds right now. What's happening?
It's the same story. Too much debt, and everyone has to serve, and not enough economic activity to pay for the debt. So if you go back, you've got a big credit card bill. If your wages aren't going up, your credit card bill keeps going up by 20% a year by interest. Before you know it, your credit card bill just gets bigger and bigger and bigger, and you can't pay it back. Now, governments are lucky because what they've got is the ability to print money.
Right.
We don't get that. But it's the equivalent of getting another credit card to pay your credit card.
Yeah.
That's what's going on as the population of most of the Western world gets older. Old people, if you think of your parents or your grandparents, they spend less money and they don't do productive work because they've retired. So we're fighting this mega trend of the baby boomers from World War II. The kids who got born after World War II are now in their 70s. And that was the largest cohort of people in all history. And so what we've got is slow growth, but massive debt. So what is happening is governments are having to print more money. And again, anybody from South America understands this. They print more money to pay the debt. But your wages don't go up. They only go up a bit. But what happens is things like houses, scarce assets, houses, gold, or even your ability to buy US stocks, they just keep going up. So you're getting poorer. Your wages buy less. I'm not talking about buying bread and cheese. I'm talking about buying assets. What is an asset? An asset is future deferred consumption. You buy an asset like stocks. Let's say you buy an ETF in the S&P 500. Why do you buy that? Because in the future, you want to sell it to be able to spend the money.
For a profit, yeah.
Or pass it on to your kids, whatever it is, but it's to be spent. And it's supposed to have a rate of return above inflation because you need to be compensated for locking your money up for 20 years, or whatever the period of time is. But what we're finding is that those things, so that future opportunity for yourself, is becoming more unaffordable. It took me 3 times income to buy my first house, and now for the average person it's 10 times income. So you can buy less of a house. You can buy a third of a house versus what I could buy with the same economic circumstances. You know, when I was 28 years old, most people can't do it now. So this is the problem that is happening in the world, and this is not going away. And so governments are printing money to keep servicing this debt, which is, again, for anybody here who's from Argentina, Venezuela, anywhere, even Ecuador, everybody's done it. And then eventually the system collapses. The system doesn't collapse this time around because it's the US doing it, and the Europeans, and the Chinese. But it's really the US system of fiat money. Don't forget, the dollar is the world's reserve currency. Again, anybody from Latin America knows, what do they want? Dollars. They don't really give a shit about anything else. They want dollars. And dollars are 87% of world trade. It makes the world go round. The world is 400% of GDP in debt, of which 200% of that is dollars. Dollars, 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 dollars. And the US controls it all. It's called the world's reserve currency.
Right.
So when they debase currency, it's very difficult for them to lose control unless the entire world loses faith in the dollars. But then where do they go? There's no other currency. What are you going to do? Buy the euro? No, it's equally shit. Arguably worse. So they have this privilege of having the world's reserve currency. And then they debase it, and scarce assets across the world go up. So it's making everybody poorer. Everyone's in this same boat. It's like a slow motion version of what happened in, let's say, Venezuela. But it's just slow. It's 8% a year. So you don't see it. It's not like 1,000,000% hyperinflation.
Right.
8% a year, but you're getting poorer by 8%. Then there's inflation on top. Call that 3%. So 11% a year, your wages are getting poorer. We were told as kids would save money.
Right.
Well, so you need to save 11% of your income every year to just stand still. Right, so that doesn't work. And then you can say, okay, if you're in the US or the UK or something, they'll say, well, invest in your pension and buy the S&P 500. Buy stocks. Great, sounds good, because stocks go up by about 11% a year, 12% a year.
On average, because they're in the recessions and this and that, but usually the average is that.
Yeah, average is around that over the last 20 years. Great. So that doesn't get you ahead of the 11% of debasement, 8% debasement, 3% inflation. So you're going nowhere. You're locking up money to go nowhere. Okay, it's better than nothing. Gold is the same. Most real estate is the same. So you're like, oh, okay, how the hell do I get out of this trap? Now, you have two answers. One is to invest in yourself and build a business. It's hard, but that's what you have to do. You have to generate cash flow to invest. If not, you can't invest.
Right.
So you need to generate cash flow. So you invest in yourself, build a business, do whatever you can, hustle, work 3 jobs. That's what everybody's doing. But then the real magic is, what do you invest in? And it's basically down to the 2 big mega trends. There's 2 trends that are so obvious. One is technology. Tomorrow is more digital than today.
Yes or no, and then it's a basic yes. It's a no-brainer.
And it'll go up and down at various points, but over time, there's nothing to stop the digitalization of the world. And we're seeing AI as one of those mega trends that goes on top of the internet, etc. The other one, which is actually technology, that's also built on top of the internet, is crypto. But crypto is like having a share of the internet yourself. So imagine how empowering that would have been. Imagine if every person who used Facebook was given a share in Facebook.
Retired.
We'd all be super rich.
Yep.
That's what crypto is. And so you can invest in this, and it goes up at about 100 to 150 to 200% a year, depending what asset, including 3 80% drawdowns. Okay, now you can unfuck your future pretty quickly, because if you've got $1,000, but it goes up 100% a year, it just compounds and compounds and compounds.
The financial system teeters under crushing debt and slow growth, with governments endlessly printing money to stay afloat. Raoul likens it to juggling credit cards, as scarce assets like real estate and stocks soar, leaving everyday people behind. Traditional savings no longer cut it, but 2 megatrends, technology and crypto, offer hope. Crypto, akin to owning shares of the internet, compounds wealth at staggering rates. Pal's advice? Invest in yourself, embrace these trends, and take control of your financial future. Crypto is flipping the financial system on its head, putting power in the hands of individuals. Raoul calls Bitcoin a global, indestructible asset and Ethereum the internet's supercomputer, enabling smart contracts to reshape society. While greed tempts many into risky meme coins, PAL urges focus on foundational assets, growing over 100% annually. Retail investors now lead front-running institutions in a $3 trillion market poised to hit $100 trillion. This is your chance to embrace a financial revolution and transform your future. Let's watch more clips from the interview.
So it's a feature of an early stage market, of a frontier. So what you're saying is, okay, well, we do have easy ways here. Is Bitcoin. You don't rely on anybody. It's this asset that's global, that's homogenous, that's available to everybody, that you can buy from your mobile phone, that cannot be destroyed, cannot be intervened by anybody. It's yours. Okay, well, that's an easy bet. I'm not now relying on a scam or anything else. There's no Ponzi. It just is. And then we look at Ethereum. Well, Ethereum's like this supercomputer of this new internet that allows you to have contracts online. Smart contracts. That's what makes Ethereum. So then you can do all sorts of clever stuff, whether it's from tickets to agreements to whatever. Human society is organized by contracts.
Mm-hmm.
So then what's the probability of scammed at the token level? 0. These are huge, distributed, multi-million people networks.
Speaking of Ethereum and Bitcoin.
Yeah. And Solana and many of the big ones.
By market cap, the top ones, kind of like the same.
Where people lose their minds is they want to get rich quick.
Chasing the next meme coin, the next big thing.
Well, because people suddenly start to say, oh my God, I don't need to be trapped in the world of 10% a year in the stock market.
Right.
I've now been given this 100% a year, and then you become greedy. All you see is, I could make 1,000% or 10,000%. And then you do stupid shit. And that's when you get scammed. Because now you're exposing yourself away from the simple bets of investing in the technology layer to now you're investing in the applications layer. And that's when businesses are starting, who's building what. You know, it's a meme coin, it's a DeFi protocol, it's all of these things.
ICOs back in 2017,
And
2018.
then you've got to ask yourself, are you qualified to be a venture capital investor, early stage? Are you doing the due diligence?
Taking the risk as well.
Taking the risk.
Yeah.
Right? They all are a power law. And so what that means is most of their bets go to somewhere near 0. Or let's say 20% go to 0, 50% don't do anything, and 10% make all the money. Now, are you qualified to do that? No, then don't do it. You don't have to do that bet when the assets are growing at 150% a year at the base asset, Bitcoin or Ethereum. You don't need to buy NFTs. You don't need to buy meme coins. You don't need to do any of these things. That's the really hard thing is the system sucks you into greed if you're not careful, and it's unnecessary. But different people use their different lens, but we don't realize, and so you're worried about regulation.
Right.
It's a global asset. The Chinese have banned it.
In
the Indians, nothing happens.
Right. Little dip here and there.
Why? Because this is a network of millions of individuals. This is not driven by the institutions. It doesn't matter whether they come or not. People want to be validated. It's a ridiculous thing.
Yeah.
Oh, BlackRock think it's good, so therefore I'm not stupid. It's like, you're not stupid because literally hundreds of millions of people are using this,
Right.
making money from it, building on top of it, and creating a new future. So therefore you can't be stupid. You do not need some bloke on television telling you that it's valid. So what we've done for the first time in history, if we go back to how I started this journey, those of us at the center would get the opportunities. And then you would charge layers of fees until it comes down to the individual. Well, they didn't even see them. They don't get to invest in Facebook when it launches. You know,
Or Uber or Airbnb or whatever.
anything,
Yeah.
right? We don't get any of that stuff. It eventually goes into the public stock market and at several $1 billion. Yes, it went up a lot after that, but somebody's made 1,000,000% returns before then. Right? This is the complete inverse. There are no gatekeepers. Retailer first. They front run all of the institutions. They get all the opportunity, all of the upside. And the institutions come later and force the prices up and we all get hilariously rich. Genius. It's a complete inversion of how the financial system works. So it doesn't really matter. I know people want the validation. Regulation helps because it stops governments shutting down your business in a different country. So yes, it helps, but don't forget, it's currently a $3 trillion asset. I think it goes to 100 trillion. The only way it gets there is to have more larger and larger pools of capital coming into the space. But if you think of it in those terms, it's still only 3% of the journey to where it's going to in the next 10 years.
Jesus.
Yeah, so it's
Your thesis of 100 trillion for the asset
so
class?
therefore it goes up 30x from here. I mean, again, people don't realize that. Am I too late? Bitcoin's at $100,000. Am I too? I'm like, it's 3%, and it's therefore it should go up 33x from here. Okay, find me anything else. Assume that I'm wrong by 50%. It goes up 15x from here. Find me another investment anywhere in the world that will unfuck your future like this. It doesn't exist. Certainly not one you've got access to.
The soaring price of Bitcoin past $100,000 marks a defining moment in the global financial landscape, paralleling Raoul Pal's insights on gold and the dollar's dominance. Under Donald Trump's leadership, the U.S. is poised to become a crypto capital, embracing policies like a strategic Bitcoin reserve akin to gold's role in stabilizing economies. Pal's comparison of Bitcoin to gold holds weight here. Both are scarce assets that thrive in times of economic uncertainty and currency debasement. Trump's proposed strategic Bitcoin reserve underscores Bitcoin's increasing legitimacy as a national asset. Pal has previously emphasized that as the dollar continues to be debased, scarce assets like Bitcoin and gold become essential hedges against inflation. Much like the dollar's status as a global reserve currency, Bitcoin is emerging as the digital counterpart, untethered from government control, yet globally accessible. Its decentralized nature and finite supply give it resilience, even amid skepticism and volatility. This shift represents more than speculative growth. It's a reimagining of financial systems. Pal notes that the average person, once excluded from transformative investments like early-stage tech giants, now has direct access to the upside of Bitcoin and Ethereum. As institutional interest grows, retail investors stand to benefit first, flipping traditional power dynamics. With Trump's pro-crypto administration aligning with these trends, Bitcoin's rise mirrors the growing demand for alternatives to traditional finance, solidifying its role as digital gold in the modern economy. As we wrap up, do you also see Bitcoin as a superior investment compared to traditional assets like gold or real estate? Let us know your thoughts in the comments below. Share this video and hit the like button. Thanks for watching, and don't forget to like and subscribe.